Hey, good morning, everybody, and welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, September 20th, and got a little bit of economic news scheduled for today, so we'll just jump right on into it. We'll start off with the housing starts. Back in July, we had about 601,000. We expected a little bit of a slowdown for August, and actually it came in at 571. So a bit of a drop off, a little bit lower than expectations. So obviously not great news there, especially as we need housing to pick up a bit more. And then second item here is single family permits. Back in July we had 423 permits that were out there, and basically dropped down to 413. So again, not the greatest of news on the housing market for today. Tomorrow is going to be one of the biggies. All week we're going to pretty much have news uh, regards to housing, but tomorrow we'll also have the Fed. The Fed begins their two-day meeting today, and then they'll do their announcement tomorrow as to what resolutions they may have, what the meeting is about, what was their announcements of what was discussed. So let's jump on into the headline news. And as you may have noticed, stock market's up a bit, and that's primarily because they're feeling a little optimism in regards to Greece. That there might be a resolution on the near horizon for Greece, so they're feeling a bit optimistic. So that's what's it's more emotion-based trading right now. And then on top of it, they're got thrown on Operation Twist. This is kind of back to the Chubby Checker uh, song from back about 50 years ago. This technique, or this tool came out around then, where basically they're trying to twist the curve line, the yield line, uh, because what they're looking at doing is they're going to probably look at selling a short term to buy long term. So it'll be like the 3 year fixes and stuff terms, and then probably buy 7 and 10 years to keep the long term rates low. So that's what their plan looks like, is what they're expected to be announced tomorrow. This is what some of the news that's being popped up as they try to contemplate as to what they could do to try to stimulate the economy without obviously hurting us, as the quantitative easing 1 and 2 really didn't do much for us. So let's jump into the bond market and see what interest rates are doing today. We had, as we saw, this little long candlewick. So we had touched, this was kind of a support, or not really support, but a ceiling here. So we kind of pulled back a bit. We did start off the morning about 12 basis points and from lower where we ended up yesterday. And right now we're about par, we're up about 12, so we're back where we closed. So this is where we're at, where it looks like could be sideways movement until tomorrow, where things, if there's any surprise or announcements of the Fed, as they kind of wait. So right now, interest rates are about the same as where they were yesterday. And so, as we mentioned, we had a nice little jump upwards, this huge opening gap. So rates are a lot better than what they were even last week. So again, rates are looking great. So buy, refinance, refinance. Also, some of the things that the Fed's looking at announcing tomorrow is potential ideas for refinance opportunities for homeowners that haven't been able to take advantage of the low rate. So hopefully we'll hear some good news on that in the horizon. Until tomorrow, you guys have a great day and see you tomorrow.